Holiday trading has begun. Why is that bad news for the bears? This is Invest with Jacob. Okay, guys, so in yesterday's video, we talked about 3 different paths and they were all available to us, but we were mostly looking for the A wave to top in this area and look for a pullback off of that. However, the market decided to grind higher in a slow, methodical fashion, which is indicative of holiday trading. This is bad news for the bears. I'll get into why in just 1 minute, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, it is the end of the year. So next week, I will be taking the week off. So I will not be in after Christmas up until January 2nd. I will return on the 2nd. It is slow trading during that time. I encourage all of you to take that time off and spend it with your family. Second, we will be launching our Elliott Wave Advanced course. This will cover things like diagonals, double threes, triangles, all the more complex things that go into Elliott Wave. It will be free to monthly members, but because of that added value, prices will be going up next year. Now, before the end of the year, I do want everyone to jump in who has been a part of this program and watched it on YouTube. So I'm going to give you the lowest price you'll see, and you won't see these prices again. We're going to give 15% off of our monthly membership. So if you sign up, you'll get a code at the end of the video. You'll get a week free trial and then 15% off of the normal membership price. Once you are in at that price, it stays at that price for your entire membership unless you cancel and resubscribe. All right, now let's jump into the chart and take a look. Okay, guys, so here we are on the daily futures chart for the S&P 500, and never mind the bars. I'm not worried about that. I have the volume down here at the bottom, and this is what's important on this. We're going to jump into the 1-hour chart here in just a minute. You can see the last 2 days, Monday and Tuesday, the volume bars are about half of the normal volume of the market. If you go across, you'll see that they're lower than almost any day that we trade. And the reason for that is we are now into what's called the holiday period. This week, many people took the week off before Christmas, since Christmas is on a Monday, and next week, many people will take the week off after Christmas. So you get a lot of low volume trading days, and usually what happens in that time is the market presses higher in a float, grindy, choppy kind of way. It's usually slow and methodical, like we saw on Tuesday, and that should continue throughout the rest of the year. Now, that doesn't mean we can't have small pullbacks. That doesn't mean the market can't even crash. It means this is what typically happens. This is the most likely outcome for the end of the year. So what I would expect is the market to give us a slow grind higher towards December 31st. Now, let's jump into the hourly chart and take a look at the counts. Okay, so here we are on the hourly chart for the S&P 500, and you can see we pushed through the 1382 fib at 48.12. This would be the first typical extension of a wave 3, and is really starting to get pretty high for a wave A. It doesn't mean it's impossible for us to get a B wave pullback. It means it's getting to be less likely, and that this A wave is now going to probably move into our secondary count, given the fact that we've pushed through the 1382, as well as the holiday trading we are facing here in the last part of the year. So typically during holiday trading, what you see is this kind of, slow move higher where the market just kind of drifts up because there's not a lot of volume, there's not a lot of selling, people aren't trying to move the market a million points. So I would assume that toward the end of the year, we would continue to see an upside move. That doesn't mean they can't pull back. That doesn't mean we won't see small pullbacks. But typically what it means is that's what you'll see. Now, our primary path, we still would like to see a wave 4 down, okay, toward the 4,700 area. That would be an acceptable wave 4 in an ABC fashion. And then a move higher in wave 5 towards 48.81. I'm not sure we will get that. We could see a direct extension to 48.81, the 1618 fib. That's a common extension for a wave 3 of 3. After the 382 is the next fib, which would be the 1618. And so if we continue to see the continued move higher, 48.50 in the middle here would be a zone of resistance. And the reason is that would be the all-time highs on the SPX, 48.58 or so right in there. Right around the all-time highs on the SPX would be 48.58 on the ES based on the contract roll and stuff. So 48.58 would be the next zone that I'd really be watching for any potential pullback in this wave 4. If they can't hold it under 48.58 and give us a pullback, then I much more think we're going towards 48.81 to extend this wave 3 of 3. Now, if they do hit 48.81 directly, our pullback would then move up to the 47.70 level. We'd look for this, and you can see there's plenty of consolidation on that level. That gives them an area to hold support and then push up in wave 5 toward the 49.24 to 5,000 area. So Just going to depend on how they trade this last week and a half of the year. If they're going to just drift it higher like they typically do and get new all-time highs in the books, and then maybe look for a pullback, or maybe even get up to 48.80 before we get a pullback. Overall, though, into the end of the year, we would be looking for a slow grind higher on low volume. Now, that doesn't mean they can't pull back or they won't pull back. It just means that typically that's what we look for. So if they do pull back, if we start to see a pullback, 4,700 is our first place of interest. That would be for our wave 4 here. If they can't hold 4,700, that's a warning that this bigger count, this 3, 4, and 5 that we have here, may not play out. Okay, they still can hold it down at the 46.31 area, but below 46.31, and it's much more likely we're going to be in either the B wave of A or the C wave coming off of this B to the downside, and just depending on what kind of structure we get would be which count we're in. So basically, if they pull back, our first stop is 4,700. They need to break this low here at 47.45. If they do that, we should see 4,700. And then if they can't hold 4,700, 46.31 would be the last stopping point of this more bullish straight up count. Below that, then we would start to consider one of the alternate counts. Over on the NASDAQ, okay, the NASDAQ did slightly push through that 17,000 area we've been talking about. They really haven't escaped from it yet or really pushed up out of here over 17,100 or so, and that would be kind of a sign that we are in a more direct move higher on the NASDAQ. We would like to see them hold 17,071 or even up to 17,341. Those would be the two levels to hold. If they can't hold 17,341, then we're likely looking at the 18,000 area in a more direct move, as we would already likely be in wave 3 at that point and breaking through the pivot at 17,676. So if that's the case, we'd be looking at 18,216 if they can't hold 17,341. So NASDAQ, slow drift higher as well, but they have up to 17,341 to still hold this wave 1. If they can't hold wave 1, then we would be looking higher to the 18,000. If they do hold, we'd be looking for a pretty decent pullback in a wave 2. There are two potentials on the pullback. We could be getting a 2 of 3, where we kind of get this kind of move and then back up, and 3 of 3. Or we could be getting a bigger wave 2 down toward the 15.4 to 15.6 area. Again, during the holidays, I don't think these are very likely. You don't tend to see big sell-offs during the holidays. It's not impossible. It has happened before. But in general, it's not something that we're going to be looking for unless we start to see support break. And that first area of support we'd want to break is this low at 16,636. Get below that, and we can start to look for one of these two pullbacks to the 16,200 or so area or 15,600 area. So NASDAQ, a little bit different than ES. It's a little bit more impulsive, gives us a little bit better of a move to the upside. But overall, in both instances, into the end of the year, we would expect slow grinds higher, and then possibly a pullback after the end of the year, just depending on where we're at and what the structure is. Guys, if you love the information that we put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link, and it'll take you right over to the website. Once you're there, check out our membership plans area. We have two incredible monthly plans, and they both come with a 7-day free trial. This is because I want you to get in there, make sure you love it, and become part of the trading team before you ever spend a penny. You can cancel at any time. You literally have nothing to lose, and these prices will be going up at the end of the year. And because of that, I want you to get in now and take advantage of the lowest prices you'll ever see on our stuff. We are giving 15% off of these current prices with the code New Year 2024, all one word. All together, New Year 2024, you'll get 15% off of whatever room you decide to join, and that is for life. And that price is locked in for life. You don't have to worry about prices going up. You will always be at whatever price you signed up at. So 15% off with the code New Year 2024. Now, I do want to show you how to enter that code because it is just a little bit tricky. When you're on the membership plans area and you hit join today, you'll fill out your information. At the top, you'll see 1 week free, then $29 per month. Okay, if you come down right below password confirmation, it says have a coupon. Click on that link and enter your coupon code right here. Remember, it's New Year 2024, all one word. Hit enter. Make sure you see this little stripey bar come up. Once it's done, it'll say coupon applied successfully. You scroll back to the top, and it says 1 week for free and then $24.65 a month with coupon New Year 2024. So you get the coupon code, you get the 15% off. One more thing, guys, when you're getting ready to pay, if you want to pay with a credit card, that's fine, or PayPal. Click whichever method you want. It doesn't matter. And then hit sign up, and you'll be able to pay on the next screen. You won't be able to enter your credit card here. You're just telling it you want to pay with a credit card. Okay, so that's how you do it. Make sure you get that coupon code in there for the 15% off. This is valid through the end of the year. On January 1st, prices will be higher. We also have our Elliott Wave for Beginners online course. This is helping real traders make real money and understand the market in a way that finally makes sense. It can be very confusing when the market has good news and goes down and bad news and goes up, and the market doesn't follow the news cycles. That's because the news doesn't matter, and Elliott knew that long ago. What matters is key levels and where the numbers are, and when you know those numbers and what happens when they hold and what happens when they break, you can trade the market confidently and understand where we're at. This is a huge advantage over people who don't use Elliott Wave because they're guessing and they don't quite know where the numbers are. This course is 25 videos in 3 parts. First is the introduction, where we go over the expectations, your mindset and emotion, the KISS method, and why it works. Your second is your chart setup and tools, where we go through every tool you need to use with Elliott Wave Theory and how to use it, as well as the Elliott Wave for Beginners area, where we go through each of the waves, how they work, how to measure them, how to know when they fail, what they look like, the pivot, the corrective depth theory, everything you want to know on the basic level of Elliott Wave so that you can understand the market. The cool thing is, guys, if you don't want to pay the $67, you can get this course for free. And here's another thing. You will get our advanced course for free, and any other courses we put out are always included in your monthly membership, so you never have to pay anything extra. You can get this course for free in one of the monthly rooms. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the charts and what to expect, as well as any training course that we release. We trade the SPY and the QQQ, and we swing and day trade, so we do trade quite often. And if you're looking for futures trading, individual stocks, income trading, as well as advanced training, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, income trading, where PT averages 5 to 6 points a day, looking for 30 points a week or about 120 a month, futures trading, and his reduced risk binary method that just crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures his trade that's so unique. Something you really need to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account, trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. All right, key takeaways for today. Holiday trading is upon us. Volume is low. We would expect a drift higher. The next key level to the upside is 48.50, around the new all-time highs on the SPX. We could see a reversal there. If not, we would look to 48.81 next. If they do pull back, 4,700 is our first target. Below that, and they need to hold 46.31. Otherwise, we're looking at a bigger pullback. Over on the NASDAQ, they held around that 17,000 area. They can still push higher to 17,071. Even 17,341 would be the next area up. Above that, and it's likely we're already in wave 3 and pushing up toward the 18,000 area. If they can hold in this area and pull back, our first target would be about the 16,200 to 16,300 area, and below that would be 15,600 to 15,400. Guys, that is your market update for today. I will talk to you tomorrow.